Oh my goodness, guys. The markets are doing fantastic today, and we got to break them down in this video. We have to talk about the Fed meeting a little bit. We'll take a look at interest rates over the past 20 years. I have a chart to break down with you guys, and I want to go over 3 oversold stocks that I'm looking at now. So before we do that, make sure to get your free money from Moomoo. Use my link down below, and you could get up to 5 stocks, each of which could be valued up to $3,500, and you get a free share of NEO guaranteed. Use that link, deposit at least $100, and boom, you get your free money. And with that being said, guys, let's get right into the video. So it's currently 11:40 a.m. on the East Coast, and the markets are up even more from where they were in my previous video today, which I did upload onto YouTube. Make sure to go check that video out if you guys haven't done so already. And typically the morning videos I make strictly for my Patreon members, but today I figured, hey, let me upload it onto YouTube. So right now, again, it's about 11:40 a.m. on the East Coast. The Dow's up over 1%, S&P's up 1.6, Russell's up 2.1, and we have the Nasdaq up a whopping 2.6%, and the VIX is down a good chunk, down 7.5, gold's down 0.7, silver's down about 1.2%. And we're now trying to break out, as you guys can see here on the 20-day chart of SPY. We are trying to break out of the wedge here. We're not quite yet there, but we're on our way. We're trying to break out of the wedge, and we're already above the highs from, when was this? Friday? Yeah, I think that was on Friday when we saw a pop to about 432 pre-market. Now we're above that point, and we hit up to about, where did we go this morning? 434.55. So we broke that high clearly, but again, we're not quite yet out of the wedge. So I have 2 alerts on the upside, one at 435 and one at 440. And let's pull up Triple Q and see what's going on here. Triple Q is above the moving averages on the 20-day chart. It's not quite yet out of the resistance from last week being around 337, but it's pretty dang close. We're fighting with that level right now, and I have my alert set at 340, which if we break 340, we might get a little pump to about 350, but I think the real reversal will occur if Triple Q can get out of 355, which at this point we're $20 under that, and we need to run at least 5 more percentage points to even test that level. So what do you guys think? Drop me a comment. What do you think about these markets? What do you think about Triple Q SPY? We have the Fed meeting today where rates are set to rise for the first time since 2018. And now that we're on this topic of the rates, let me pull up this chart and show you guys exactly what things looked like back in 2018. And we'll take a look at what they looked like earlier in the 2000s. So this chart shows you the Fed funds rate from, again, early 2000s to now, present time, where the Fed funds rate is 0 until later today when we're likely going to get that 25 basis point hike. So you all can see back in 2002, about 20 years ago, well, I guess exactly 20 years ago at this point, the Fed funds rate was about 1.7%, and it dropped down all the way to 1% in 2003 heading into 2004. And then we had a crazy rate hike cycle in the beginning of 2004, where we went from 1% to about 5% in 2006, towards the end of 2006. So a good two and a half year period of straight up rate hikes. We went again from 1% to 5%, which is nuts. And then, of course, you guys know what happened. The great financial crisis. Rates went boom from 5% down to about 0%, exactly 0%. And then we coasted at 0% from 2008 all the way to 2015, and that's where the Fed started hiking again. 2015, 2016, they started the rate hike cycle, which lasted all the way until Christmas, pretty much, of 2018, which you guys remember at the end of that year, 2018, we had a big stock market dump. You guys have seen that chart before. SPY was down a good chunk, and that's when they were raising rates. You know, the market started to collapse, and what happened? They pretty much U-turned in the beginning of 2019, and they dumped the rates, started going down, 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 and then COVID hit right in the beginning of 2020, and when COVID hit, guys, rates were at 1.5%, so they were coming down already, but not a huge amount from 2.5%. Then once COVID hit, boom, we got that big dump to 0%, And voila, here we are. So that's a quick little 1 minute, 2 minute history lesson on the rates from the past 20 years. And now we're going to see many rate hikes. I've seen as many as 17 rate hikes projected, and nobody knows exactly what's going to happen. Anything could happen between now and 5 years from now, obviously. And I've seen 5 rate hikes, 10 rate hikes. So we're going to get a bunch, that's for sure. But the question is, how many? Nobody freaking knows. So let's go back to ThinkOrSwim and talk about some of these stocks that I'm looking at. And actually, 2 of them are ETFs. So I might be cheating a bit in this video, but it's all good, guys. It is all good. We are here to make money. So number 1, we're going to talk about SQQQ, which is an ETF it's a bear ETF that tracks triple Q. It's a 3X leveraged ETF. So essentially how it works is, you guys probably know, a lot of you know, but some of you, if you don't know, SQQQ goes up whenever triple Q goes down. So essentially, if you want to bet against the NASDAQ, the tech-heavy index, you can buy SQQQ. And let's say triple Q goes up the NASDAQ goes down 3%. SQQQ is going to go up 9%. That's how it works. I mean, look today. SQQQ is down 8% because triple Q's up 2.5%, 2.6%. So it's an inverse ETF. So essentially, again, you could be a bear, a bear on triple Q and make money trading SQQQ. So this is at a pretty nice dip right now. It's come down a good chunk recently from $53. Now it's at $43. It's down about 20%. So it's essentially in a bear market. And let me tell you this, guys, these are very, very risky, the leveraged ETFs. I've lost a good amount of money in the past, especially when I was a beginner trader, investor, right? I lost a bunch of money on these leveraged ETFs, and I've talked about that openly here on my YouTube channel many, many times, so it's no secret. But now that I'm more advanced, I've been doing this for more years than when I started, obviously. I mean, I haven't quit doing this, so I guess I'm still doing it, right? And I think I could handle them and trade them a little bit better now. So if you're more of a beginner, I'd be careful with these. They're very dangerous, but if you're more advanced, hey, intermediate even, you could do this. So you can trade these and trade them responsibly. So at this point, we're right by the 180 moving average, which we've held this countless of times throughout this entire rip, this bull market in SQQQ, whatever you want to call it. I mean, look at all these times we've held the 180 SMA. So I think this could very well be another time where we do see a short-term bounce. I'm not saying it's going to go back to 55 a share, 53 a share where it was, I believe, when Russia officially invaded Ukraine on the 24th of February. I don't know if it's going to get back there, but could it pop from $43 maybe to 50? Or 48, 45 even? Yes, very, very possible. And I do believe that there is more volatility in store, just because today we have the Fed meeting, it doesn't mean we're going to just rip out of nowhere now. We're still technically in a downtrend, and if you've shorted every rip triple Q has seen in the past couple of months, you've made freaking money. That's the name of the game right now. If you shorted every rip, you've made money. So let's see how the Fed meeting goes. I'm not going to jump into SQQQ right before the Fed meeting. That would be pretty irresponsible, I feel like. I mean, you could do it. It's a bit of a gamble. I'm going to wait till after. We'll see if we get maybe a blow-off top rally during the Fed meeting. That's very possible. And then that could potentially be shortable. So watch out for SQQQ and triple Q. And, of course, the Fed meeting. That's a big variable today. Disney is another one that I'm looking at, which you guys in my Patreon know I bought more Disney today. I believe at 130. What was it? It was either 139 or 138. I forget what price. Either way, I bought more Disney today, and it doesn't make a difference, 138, 139, because overall the stock is still down about 35%, 35% from all-time highs, and I believe this one's going to do very well heading into a post-pandemic world. I've mentioned this before. The pandemic, it's slowly wrapping up. Cases are down a ton. People really, let's be honest, are not too worried about it anymore. People are out and about living their lives, and Disney is well positioned for that way of life. For us going back being, out and about. But one thing that could hurt Disney is the huge inflation. Sure, they could raise their prices. People are going to pay no matter what for the Disney tickets. I mentioned that. But with inflation running rampant in other areas of life, maybe people might not be able to take they might not be able to go to Disney as often. They might not be able to go on a vacation. So that's one thing worth monitoring as well. We're not going to just look at it from the bullish perspective. We got to look at it from the bearish perspective. And if we're in a recession, if we're going into a recession, that might hurt Disney. But overall, let's say inflation dies down. People aren't strapped for cash. Markets go back up. Things with Russia, Ukraine ease up. And, of course, the pandemic continues to wane away. Disney's going to go crazy, in my opinion. So that's why I'm watching it and why I'm buying more of it. Again, I bought more of it today. And I'm also looking at XLE, which is now down about $9 from the recent $80 high. It's now down 10%. And you guys realize, right, the bear trade has kind of been shot the past couple of days. Oil's down a lot, metals are down a lot, the VIX is down a lot. So the bears have been crushed. Markets in general, equities are up a ton. So I don't think the bear trade is completely over. I think it's cooling off a bit. Kind of like what I said with SQQQ. Exactly that applies here to XLE. I think oil's cooling off a bit, and it could very well be getting ready for round two. I mean, mind you guys, March numbers for inflation, CPI data, they're going to be bad. They're going to be ugly, worse than February. So keep that in mind when you're looking at these charts. I think these pullbacks could very well be bought up in crude oil, XLE, gold, silver. I don't think the rally's necessarily done. So that's it for this video. Let me know your thoughts in the comments. Smash the like button, subscribe, join my Patreon if you guys want all my moves in the markets, real time, Discord access, morning videos as well. That's linked down below. And don't forget to get your free money from Moomoo. You get one free share of NEO guaranteed, which you guys know today the Chinese stocks are on fire, which I mentioned in my previous video. We have NEO up over 20%. So if you want a free share of NEO and you get up to 5 other stocks, each of which could be valued up to $3,500, use my link down below, deposit at least $100, and boom, you get a free share of NEO and 5 other stocks. Enjoy that money. I'll catch you guys in the next video. Thanks for watching. Peace out.